this video, we're going to talk about how to create a strategy for each of the three major types of trades, which are reversal, continuation, or breakouts. We will go over three things for each of these types, which are what type of indicators they need, what kind of price action, and what kind of stop or target a trader might use. So this should help you with steps 3 and 4. Let's start with the reversal strategy. This is when the trader is looking for the price to reverse. This is often known as a dip buy. However, a trader could do the opposite, shorting a large pop. A trader can do a reversal strategy using any time frame. They might want some indicators that will state an overbought or oversold state, like stochastics, Radium Fire, the RSI, or maybe the stock just being outside the Bollinger Bands. The trader just needs to get an idea of how extended the stock is, either up or down. The goal for a reversal strategy is often to ride the price action back to the mean or back to the middle area after a big move. A trader will use any of the indicators mentioned as an exit signal as well. Maybe they will wait for it to go from overbought to oversold, or oversold to overbought. With the reversal strategy, there are two types of price action to watch out for. Either a basing-like price action or an emotional-like price action. You can tell this by looking at the size of the moves with the volume. For example, if there is a large drop and a large volume bar, that is likely an emotional move of a bunch of people or a large position being stopped out or shorting the stock. This is usually near the bottom or the top, depending which direction it's going. For a basing price action, a trader would like to see the stock hold a certain level and then start to have rising volume with the rising price action reversing. It is imperative that a reversal strategy has a clear entry area that is a strong support or resistance level. This can be done using SMAs, Fibonacci, pivot points, symmetry, or maybe just daily levels. Of course, there are unlimited ways to figure this out. Next, let's look into continuation trades. A strategy will likely need to consist of an indicator that is showing price action is consolidating, like a Bollinger Band contracting, or the TTM squeezing. A trader doing a continuation pattern is looking for a stronger trend on the time frame they are using. Chart patterns are often more important with a continuation strategy. Rising volume with a trend is also commonly looked at. A trader might use SMAs, EMAs, and other support and resistance levels to time their entry and exit. They may also want to use a trailing stop, trying to catch as much of the move trending as possible. Lastly is the breakout or breakdown trades. These will likely need an even stronger trend and a stronger volume and really strong momentum. A lot of momentum traders really don't use any indicators because their key indicator is simply price action and the overall strength or weakness of the stock. Breakout traders are most popular among momentum traders that trade straight momentum stocks. These are typically the stocks that have gapped up the most or gapped down the most. The momentum stocks are typically the smaller cap stocks or stocks that just had some news, that just has tons of buyers or sellers. A momentum trader usually will be found using level 2 along with the tape or order flow window. So they can track how many buyers and how many sellers there are. This will help them gauge the momentum of the stock. It's also important to look at how large the buyers or sellers' position sizes are. A trader will likely stop out if it seems the momentum has started to slow down or if the trend seems to be shifting. In summary, there are three main types of trades: a continuation that typically needs consolidation and prediction of a move in the direction of the trend, a reversal trade that needs some sort of extension type of indicator, or price action that a trader is reacting to, not trying to predict, and then doing the opposite. And a breakout trade focuses more on volume and momentum, and using the price action a little more heavily. Your strategy type needs to fit your personality, just like the length of trade does. That's it for this topic, and I'll see you in the next video.